In this video, I'm going to give a bird's eye view of financial statement analysis. I am motivated to make this video by the fact that many students majoring in business do not see the value of understanding and analyzing financial statement. In specific, I'm going to provide an overview of who uses financial statement, how to use financial statement, tools and techniques of financial statement analysis. I assume that you have already taken introductory financial accounting course. Therefore, I explain everything from user's point of view. In this slide, I have provided meaning of three most widely used financial statement: balance sheet, income statement, and statement of cash flow. But I want to emphasize that you must get financial information from other sources if you want to use financial statement more smartly. Here I explain who uses financial statement. For example, manager use financial statement for performance evaluation, competitive analysis, investment decision, and valuation of targets. Financial managers use financial statement for evaluating the impact of investing and financing decision on both future profitability and risk. Similarly, equity analysts use for stock recommendation. Investment bankers use for merger acquisition and IPOs. So this slide explains you who uses financial statement. This is a broader picture here. So now I want to emphasize here where you should start from. And you should start from understanding each financial statement and how they are interrelated. This slide gives you interconnected or among the financial statement. Please use this slide. Also, please use my pictorial presentation of financial statement to understand interlinkages among financial statement. In this slide, I give the overview of how to use financial statement. Being a student in business major, you must know how to manage, analyze, and value a company. Analysis and valuation of a company always start from understanding the business environment and identifying the company strategy. Financial statements are building blocks for understanding business environment and company strategies. Now, three major decisions every business should make are investing, financing, operating activities. And you can use financial statement to analyze a company's investing and financing activities. I want to emphasize on number 3, which is determining the current and future financial health of a firm, meaning evaluating the performance and risks of a firm. And a business student always should do that. So when you want to evaluate the current and future financial health of a firm, you're going to use the financial statement very heavily. Valuation of a business is another important task of student majoring in business. Financial statement provide most information necessary for valuation, and we are going to also cover this topic under topic 6. Financing and working capital management are two other important skills business students should have. And when you want to make financial planning and cash management or the working capital management, financial statements are going to be very useful, and this is also the topic we're going to cover. So we're going to cover 3, 4, and 5 under topic 6. Besides these 3 important applications of financial statement in finance, debt and dividend analysis is very important, because debt dividend policies are important because they affect the value of a business, and financial statements are very useful while analyzing dividend and debt policies. And besides that, merger acquisition are very important part of good corporate investment, and financial statement analysis are used as well there. And corporate communication and governments, managing a corporation, communicating with the stakeholder is another important task you might have to face in the business. So if to effectively communicate to your stakeholder, you might want to use financial statement. But I want to emphasize here the first 4 or 5 points, because that also gives a sequence of financial analysis. So when you want to do financial analysis, you should always start from understanding business and industry environment and identifying the company strategy, and then evaluate its investing, financing, and operating activities, because this is the building blocks. First 2 points are the building blocks for determining the financial health of a company and value of a company. So when you have to find the value of a company and when you are planning for the future working capital management, it's always, you should start from point 1, understanding the business or industry environment, identifying the company strategies, evaluate the investing, financing, and operating activities, and then after we can use different ratios for determining the financial health of a firm and valuation. And that's what we will be doing in the forthcoming classes or forthcoming slides. So here I just give you the bird's eye view of the techniques used for financial statement analysis. Basically there are 3 techniques: time series comparison, cross-sectional comparison, comparison to a benchmark. In time series analysis, you compare the financial measure over years. In cross-sectional analysis, you compare the financial measures across different firms in the same industry. Sometimes you can also do across industry with certain limitations. And sometimes you can compare your financial measures, whatever measures, ratio or anything you use as a measure, to a benchmark. It could be a market, it could be an industry average or something like that. But I want to focus here that financial statement analysis is not a mechanical thing. A computer can do it. It needs your judgment, it needs your critical and analytical skill. So I want to emphasize that when you are doing financial statement analysis, you just don't focus on technical aspect. You have to use your judgment, understanding from other disciplines like finance, economics, marketing, and strategy. Finally, I want to discuss about the tools they are used in financial statement analysis. And like there are 5 basic tools we will be using in financial statement analysis. The first one is comparative financial statement analysis, in which case what we do is we look at the value of individual items from each financial statement over years. And common size financial statement, this is another tool available for financial statement analysis, in which what we do is we express every item in balance sheet or income statement as a percent of total revenue or total assets. And then once we have all that number expressed as a percent, then you can do the trend or historical analysis and cross-sectional analysis. Ratios are most widely used tool as well, and we are going to use different kind of ratios for looking at the performance of a company and the risks, as well as for working capital management. And graph and chart are another very important tool used heavily in financial statement analysis, and we're going to use them as well. And valuation models, and there are different mathematical models used to find the intrinsic value of a company or a stock, and we are also going to use. So these are the basic 5 tools we are going to use, and most people use too. Thank you.